Mortgage brokers are paid a percentage of the loan value that you borrow. It varies bank to bank, sometimes even between brokers and the people that they license themselves through. But typically speaking, it's around about 0.65% of the loan value straight away. And then they get about 0.15% every year, including the first year thereafter. So on a $500,000 home loan, that's going to be around $4,000 the first year and about $750 a year thereafter. The way this works so that it's profitable for both banks, and brokers and consumers is that typically speaking, a bank has a net interest margin of around about 1.8%. Varies bank to bank, and it also varies depending on other competitive market forces at the time, but that's sort of like your standard. So they're borrowing money from consumers with term deposits and savings accounts and that kind of thing at about 4%. They're adding 1.5%. They're lending it out at 5.8%. What does that mean? That means over the course of like a standard 5-year home loan, because you sign up for 30 years, but most people either sell their house or refinance or pay it down or something. They don't last 30 years. After a 5-year home loan, 5 years of the home loan, on a normal home loan, that means the bank's going to make around $45,000 gross profit. That's not net profit. That's gross. That's like how much they earn in profit. Then they have to pay all their costs. Over that same time period, the mortgage broker is going to earn around $7,000. So if the bank is writing a home loan themselves, they get to keep all that 45, but they have to pay extra costs like staff, marketing, training, blah, 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 blah. Whereas with a mortgage broker, they're only paying on the profit of each individual thing with much, much lower costs. So it works because the mortgage broker is just taking a cut of the profit, and it's a variable cost of acquisition, which is good for business. The real conflict of interest in this whole scenario is not really, or in my opinion, it's not really where, bank one pays 0.15% and bank two pays 0.17 or something. Yes, that does make a difference, but very few people really consider it. I think the real conflict of interest is that because mortgage brokers are paid a percentage of your loan value, and it's roughly the same amount of work for a $500,000 loan as it is a $600,000 loan, and for you as a consumer, whether you borrow $500,000 or $600,000 is a massive difference on your life and how much you have to repay. The real conflict of interest is that the mortgage brokers are and banks, the whole system, is incentivized to encourage you to borrow more. That's it.